Hello everyone, this is Sachin. Today I'm going to talk about what is arbitrage, how does arbitrage trading works in the modern technology, and how can you profit from it. Okay, so moving forward, what is an arbitrage? Okay, different markets to profit from any price difference is known as arbitrage. Okay, just a minute. Yeah, different markets to profit from any price difference is known as arbitrage. Okay, for example, or I can tell one more definition as follows: taking advantage of price difference to make a profit. That can be a good example. Sorry, a definition. Okay, so example: I take a stick. Okay, this stick, and you live in New York. Okay, and this stick cost about $100. Imagine just $100. Imagine $100. Just a dollar symbol, man. Yeah, okay, $100. So you live in New York and you go to the shop and buy a stick for $100. And now the second case. Listen carefully. You went to Boston. Okay. Now you are in. Now you are in Boston, and this stick now cost about $200. Okay, this stick cost about $200. Okay, okay, this stick and this stick are same in brand as well as the size and most of the characteristic, but the price difference you can see in New York and Boston. So now comes the play of arbitrage. You buy the stick in New York at $100 and you travel to Boston and you sell it for $200. Simple. You make a net profit of $100. Okay. You know the price difference between the same stick between two places, New York and Boston. $100, $200. It's the same stick. You just buy it at a lower price and sell it at a higher price. Make it a net profit of about $100. So this arbitrage trading works in all types of forms such as crypto, uh, for example currencies, and cost of goods in different countries. And yeah, if you want the proper definition of arbitrage, start. Arbitrage is when an asset is bought in one market and sold in another for a higher price. That's what I'm trying to say. Okay, I can share you the benefits and drawbacks soon. Wait, let me come over to that part soon. And I want to say a fact about high frequency traders, where they do latency arbitrage and trade markets at a greater speed. That is, the trade gets executed within milliseconds. Okay, you can as well go for currency arbitrage. There are a variety of types, which I'll discuss it later. But you need to keep in mind about the rules and regulations about your countries and jurisdiction. And okay, now now comes the real example. Now we go to the terms of um, now we go in the terms of crypto. Okay, now imagine you are in Binance, sorry, BNNCE, and Bitcoin at $70,000. Okay, and there is one more stage where you're gonna buy another Bitcoin. Sorry, I mean there is another Bitcoin which current price is about $80,000. Not the actual price currently going on in the market, but just as a reference to it for an example. Just a Coinbase, let us say. So if you talk about what is Binance and what is Coinbase, we see these are the crypto exchanges that we can buy and store crypto coins, and these are centralized crypto exchanges. Okay, now the real stage comes. You buy a Bitcoin at $70,000 in Binance. You transfer it to Coinbase, where one Bitcoin is worth $80,000, and you sell it. Okay, you make a net profit of $10,000 as an overall background. Now, if I talk about what are the drawbacks, so it's not like you'll get the whole $10,000, right? Okay, the situation where there is transaction cost, gas fees, and few other drawbacks that I'll be talking. Okay, okay, I'll tell you. And a person who's using arbitrage is known as arbitrager.